evening and thanks for joining us on Markets today. It's been quite a topsy-turvy session once again. Some volatility and some not-so-great global cues ensuring that the bulls had to remain on the back foot once again. Hi, Sonia.
Hi, Surbi. Yes, in fact, this market has been very range-bound between 8,300 to 8,600. But within that range, there's been so much volatility. And now it's been all about individual stocks. So even in today's trade, you saw technology stocks, you saw auto stocks, Midcap IT, Midcap Pharma do very well. So it is a stock pickers market within a very narrow range.
Absolutely. So we will be talking about a lot of that stock-specific action and all the other headlines that were dominating the street action today. Let's start with the top stories. Weak global cues keep the bulls in check on Dalal Street. Markets give up morning gains to close marginally lower. The Nifty loses 10 points, ending around 8460. The Sensex ends down 0.2%. IT, auto and PSU bank stocks track gains. However, commodity shares remain under pressure.
And Midcaps outperform with the Midcap index gaining 0.5%. JP Infra surges 11% as the National Green Tribunal allows sale of the company's apartments in Noida. Sharon Bio hits a 20% upper circuit on hopes of its plants getting the US FDA clearance. And coffee and rubber stocks like Tata Coffee, CCL products rally after CNBC TV 18 reports the government may allow 100% FDI in coffee and rubber plantations.
Moody's cuts India's growth forecast to 7% for 2015 versus 7.5% earlier, citing lower than expected monsoon rainfall. The rating agency, however, maintains its forecast for 2016 at 7.5%.
And politics takes precedence as the government gets into poll mode. The Prime Minister Narendra Modi announces a 1.25 lakh crore rupee special package for Bihar ahead of the state elections, allocates an additional 40,000 crores for infrastructure development.
All right, those were the headlines, and here are the experts that we've got lined up for you on the show this evening. First up, we've got Gautam Chachoria, who will be joining in to give us his take on the markets and, of course, top sectoral bets as well. On the banking front, we have Usha Ananthasubramaniam, the newly appointed MD and CEO of Punjab National Bank. She will be telling us what she makes of Indradhanush and how she's planning to deal with the bank's NPA woes. And also from the banking space, Chandra Kochhar, MD and CEO of ICICI Bank, giving us her sense on how the interest rate trajectory is going to move going forward.
All right, well, straight up to all the market action of the day, the Indian markets failed to hold on to early morning gains, with both the Nifty and the Sensex ending marginally in the red. So while the Nifty failed to hold on to 8,500, the Sensex also lost close to 50 points by the end of trade today. Banking stocks, which were on fire yesterday, saw some profit booking in trade, while the mid-caps continue to outperform. And on the upside, it was technology stocks that did quite well, with stocks like Infosys hitting fresh 52-week highs. Anuj Singhal is standing by to take us through all the market action. Anuj, it's been once again a very choppy day of trade.
Oh yes, it was all about China. It was a volatile day. In the first half, it looked like the market was again trying to make a bit of a breakout move. But then, of course, we had that big fall in China. And, of course, that Modi's outlook as well. But that was a bit of a minor factor. The major factor really was China, and that led to that decline in the market, though the bulls managed to come back in late trade and market ended only with minor losses. But again, there's no stopping the mid-cap party, and that's been the way to play this market, individual stocks. And yet again, individual stocks outperformed in trade today with advanced decline of about 3:2. Let's talk about some of the stocks then that were lower today because it was a down day. GAIL was the biggest loser, down 4%. Coal India, what a spectacular fall for Coal India in last 2 weeks or so, and NMDC was down about 4%. Pharma stocks, some profit booking in big names, especially Sun Pharma and Lupin, and Cipla, of course, has been a weak stock for last couple of days. Other Nifty losers that in terms of significant weight in the market or in the Nifty included stocks like Tata Motors, ONGC and HDFC, all down between 1 to 2%. On the gaining side, BPCL made a bit of a comeback after the recent correction. That stock was up 4%. Tata Steel was up 2%. And what can you say about Maruti? Keeps making lifetime highs almost on a daily basis, up another 2% in today's trade. IT stocks also saw some big gains today, led by TCS. That was up 2%. Infosys closed second, up 2%. And Tech Mahindra up 1.7%. But as I said, it was all about IT stocks. And within that, Midcap IT clearly was the sector of the day. Stocks like Tata LXI up 20%, Intellect Design up 11%, and HCL Infosys up about 8.5%. Some more gainers then. Escorts, that stock had big gains today, up 10%. JK Tyre was up 8%, and Tata Coffee was up about 7%. So for overall markets, it still remains in a bit of a zone of 8,300 to 8,600, but no stopping the mid-cap party.
All right, Anuj, thank you so much for that. Yes, broader markets having a much better session than blue chips today. Time now to bring in our first market guest on the show. Gautam Chachorya, head of India research at UBS Securities, says that a fall in interest rates is a positive catalyst for the market.
In our view, the big positive surprise ahead is interest rates. So we continue to believe since last year that there is a strong disinflation process in India, and that's the area where markets will keep on being surprised positively. So we're still expecting and maintaining a view that there will be 75 basis point rate cut by the RBI by March of 16, and that should be the positive catalyst for markets. We remain positive banks overall, and within that we also like the PSU banks space. Because both of the view on interest rates as well as the view on the SOE reforms theme which has been running. So our top pick remains SBI in SOE banks. The move towards digital is actually not priced in or looked at realistically in our view by the market, because this is disruptive and for a change the Indian IT services companies are incumbents rather than the ones who are bringing in innovation. So for them to transform their business completely over the next 3 to 5 years and still maintain double-digit earnings growth, which is what's factored in, that seems a bit challenging in our view.
All right, that's the word coming in from Gautam Chacharya, but fears of an economic slowdown ripped through trading rooms in China, with the market suffering another sell-off today. The benchmark Shanghai Composite Index plunged by over 6% in the last hour of trading, and that is the biggest fall in around 3 weeks. Now, the down move was triggered by a fall in the yuan, of course. The Chinese central bank offered 120 billion yuan in routine money market operations via 7-day repos. That is the largest amount of cash injected into the financial system in a single day in the last 19 months. Now, this action was seen as necessary to stem the fall in the capital markets and in preventing capital outflows. Adding to concerns was data that showed a slowdown in monthly house prices. Let's now hear out some analysts on what they made of the China slowdown.
Right now, we're dealing with a situation where you've got retail investors looking around at the economy in China. They're not seeing particularly great data. They've just gotten hit very hard with the currency devaluation over the last week. And so they're really sort of pulling back and retrenching right now. And so I think it's just overall negative sentiment right now more than anything else. So I'm not really surprised that we didn't see a bump, even though the government's putting more money back into the market.
I think the clearest suggestion we have is that we were approaching a key technical level previously, after which the Chinese authorities have said they wouldn't be buying. So this is what happens when you have the government artificially trying to support the market up to a certain point. Once you get beyond that, everyone says time to sell. It's very much a one-way market. Everyone buys in the same direction when they think the government are supporting them, and when they get to the level where they think the government isn't going to support them anymore, they all sell. So it just underlines the fact that the authorities can't dampen down volatility, and they can't permanently manage to reflate this market. All they can do is limit the downside to a certain extent.
And in an article written in the Wall Street Journal, which was of course published yesterday, Morgan Stanley's Ruchir Sharma says that the next global recession will be made in China. This because the country has been contributing to 1/3 of the global GDP this past decade. He writes, and I quote, "Policymakers have been trying to sustain an unrealistic and randomly selected growth target of 7% by steering cheap loans into one bubble after another. First housing, most recently the stock market, only to see each bubble collapse," end quote. He goes on to say that global growth is stuck in the 2 to 2.5% range, which in essence is one shock away from recession. A 1 or 2 percentage point decline in China's growth rate could prove to be that shock.
All right, and Moody's Investor Service has lowered its forecast for India's GDP growth to 7% this year. That is lower than the 7.5% growth forecast that they had earlier. Now, the downward revision has been attributed to a drier than usual monsoon. According to Moody's, the below-average rainfall has clouded prospects for farm production. This could hurt rural incomes and weigh on consumer demand as well. However, policy changes are expected to strengthen growth next year. Moody's expects the GDP to bounce back to 7.5% in 2016.
it's actually been a little bit more subdued than people expected. And I think that partly reflects lower domestic demand. The factors driving the rupee down in the years even preceding 2013 were largely domestic. They were domestic policy, current account deficit, etc. Now it's really the external environment. Global factors are likely to be on the side of further depreciation in the near term. We think that might sort of put a little bit more pressure.
Moving on, in what could be termed as a huge relief for home buyers and owners in Noida, the Environment Minister today said that they have approved eco-sensitive zone around Okla Bird Sanctuary and added that the notification on the eco-sensitive zone will be out in a week's time. What's also important is the fact that developers like the JP Group and DLF will finally be able to go ahead and sell their projects in that area, which have been stuck around in litigation since October 2013. Now, with local authorities finally being allowed to issue completion certificates, beg your pardon, for these projects, making close to 60,000 flats and some malls also available for possession right away.
मुझे लगता है कि एक बड़ी राहत है जिन लोगों ने अपने फ्लैट्स बुक किए थे। अनेक लोग ये मंथली EMI भी भर रहे थे और रेंट भी भर रहे थे। हार्ड अर्न मनी लोगों की लगी थी, उनको एक राहत मिलेगी क्योंकि एक कंफ्यूजन उसमें से समाप्त हो गया।
All right, well, that's the latest coming in over there. But Nayantara Rai, who tracks the realty sector closely, joins us now to give us all the details. Nayantara, it's great news for all the home buyers and the developers like DLF and JP Infra.
I think after 2 long years, you're talking nearly 30,000 home buyers that are going to get a good night of sleep. For 2 years, they had no idea where this entire issue was going to go. As you just heard the Environment Minister say, the notification should be out within a week's time for the new eco-sensitive zone. And that new demarcation by the government is crucial because it actually allows all real estate activity in the city of Noida as well as Delhi. So post that notification, you should see the Noida authorities start to give out completion certificates. And Sonia Sudbir, if you were to come to Noida and drive through the expressway, you would see hundreds of buildings that are ready to move in, but people couldn't move in because of this 2-year-old NGT order. But one also has to ask the government that why did it take so long for them to arrive at a decision? In September 2014, the government came out with a draft notification. By January, it had said that all discussions had been closed, but we never saw the notification come. We never saw a final decision come. So it's taken 8 months since then, and that is something the government should tell us about why. But since this is a market show, not a consumer-oriented show, it's certainly good news for JP. It had almost 20,000 flats in JP Wishtown. You look at DLF, which was marketing the largest mall in the country. It was supposed to get marquee brands, whether it's H&M or Uniqlo, make their India debut from that mall, but then they went to one of DLF's competitors, so they will probably want to start opening for business. The structure is ready. Right opposite the DLF mall, you also have a Unitech mall. That company, in desperate need for new revenues, it will also probably want to go ahead and start its mall operations quite soon.
All right, Nayantara, thanks for that. Well, we spoke to Rajiv Talwar, the Executive Director of DLF, which is one of the biggest beneficiaries of this green nod. Let's take a look.
So let's hope that the notification is as per the draft. We'll have to wait and see the final word in the notification and the distance of the economic sensitive zone, eco-sensitive zone, sorry. And we'll have to see that when do the Noida authorities start giving out completion certificates so that occupation can become a reality in this entire area. Grateful to the government for the action they've taken.
It's a very positive development and CREDAI welcomes this. We have been waiting for this for a long time. More than 60,000 flat buyers in Noida have been waiting for this for a long time. So we are very thankful and grateful to the ministry to have finally taken this call. As per the understanding that we are currently getting, is that the draft notification, which had come out in September 2014, has been approved by the National Wildlife Board, and notification is expected within a week's time.
Okay, so now is the big news coming in from the real estate space. Moving on, the banking sector needs to look for innovative ways to tackle non-performing assets. That's the word coming in from freshly appointed MD and CEO of Punjab National Bank, Usha Ananthasubramaniam. She also spoke about the government's Indradhanush program earlier today. Let's see what she had to say.
As I take over, I would look at some more innovative ways of tackling the NPAs. I mean, it's a few hours that I've been in the bank, but I think the kind of the ready-made solutions are not getting the right kind of answer or the results for the bank. Some government intervention will be certainly required in terms of anti-dumping duties and hiking the import tariffs, those kinds. I mean, certainly there is a role for the government. What it has been done is little. I would say it's too little. 2.5% was announced. 2.5% is too little. I would say that first time there has been a comprehensive announcement that has been made, which we need to really appreciate, because always it used to be in bits and pieces, maybe maybe a capital infusion announcement or something here and there. What plagues the public sector banks is, from my point of view, it is the board. You need to have real professionals running the board.
All right, and more bankers speak. Chanda Kochar, MD and CEO of ICICI Bank, says lower cost of funds would lead to lowering of interest rates.
Clearly, first of all, directionally, I must say that a lot of the macroeconomic factors and parameters have come under control, whether it's on the current account side or on the fiscal side. The inflation is really coming under control. So overall, we are moving towards a softening interest rate environment. Specifically about our rates, we were the first bank to actually start the cut on the base rates. And I think gradually as the cost of funds keep going down, you would see interest rates coming down. So I think directionally, I can definitely mention that we are in a softening environment.
All right, we'll take a break on that note, but coming up, it's a massive booster shot for the poll-bound state of Bihar. The Prime Minister has announced a whopping 1.25 lakh crore special package for the state. We'll give you all those details on the other side.